Welcome back to The Open here on BNN Bloomberg. As we've told you in our newscast this morning, BCE has announced a major acquisition in the United States. BCE will buy Ziply Fibre, a big provider of fiber optic internet services in 4 northwestern states: Washington, Oregon, Idaho, and Montana. BCE believes Ziply provides years of growth potential in a market as yet underserved by fiber optic internet service. To talk about the transaction in detail, we're joined by the Chief Executive Officer of BCE, Mirko Bibic. And as a reminder, BNN Bloomberg is owned by BCE and BCE's Bell Media business. Mirko, thanks a lot for joining us on what I know is an extremely busy day for you, so we appreciate your time. I think Ziply is not a publicly traded company, so our viewers who are very familiar with publicly traded companies probably this is a new name to them. So why don't you describe Ziply to us and then move on to why this has become so attractive to BCE.
Thank you, Paul. It's great to be here. Thanks for having me. So I'll start with this. Fiber is absolutely the best technology in terms of communications. It is the present and it is the future. It offers the very best in broadband to consumers and enterprise customers, and no matter where you are. And Ziply Fibre, just like BCE, Bell Canada here in Canada, is the #1 fiber operator in the country, offering the fastest broadband speeds. That's what Ziply Fibre does in the 4 Pacific Northwest states that you mentioned at the top. And what they've done a marvelous job. So what they've done is they've taken what was a basically legacy communications company that was operating on legacy copper networks, and much like what we're doing in Canada here, which is building more fiber faster to more locations as fast as possible. Ziply Fibre is doing that in their 4 operating states, and they're fiberizing their network and now have become the leading broadband and fiber optic operator in those states. So that's who Ziply is. And in terms of why this is a great day for BCE, in terms of, it's a front foot move. It's like we're seizing the growth agenda here, doing what we do best, fiber and broadband, and what they do best, which is fiber and broadband. So our visions are completely aligned. We both have a customer experience first culture, and we're going to come together, and with Bell's scale, we're going to bring that competitive advantage to the U.S. and combine that with the Ziply management team and accelerate their fiber build like we've done over the past few years here in Canada. It's going to generate significant subscriber revenue and EBITDA and free cash flow growth over the long term for BCE shareholders. So that's why it's a very big day for BCE.
How big is the Ziply footprint now? I gather it's 1.3 million locations. Is that correct? That's to say that network reaches 1.3 million addresses, correct?
Okay, so they reach 1.9 million addresses, but 1.3 million of those addresses have fiber today.
Right.
And the objective together is we're going to accelerate the 1.3 with a goal of reaching 3 million households passed in their 4 states with fiber access by 2028. And an interesting part, the reason why we wanted to do this, and it's such a big growth potential for BCE, is that unlike Canada is so much further ahead than the United States in terms of fiber availability. So 75% of households in Canada have fiber availability today. So the very best broadband technology in the world, whereas in the US, only 50% of households have access to fiber. And we know fiber works. We know customers choose fiber when they have it available to them. And we're going to push forward on the growth agenda with Ziply Fibre in those 4 Pacific Northwest states. You
made some comments on the conference call about accretion to cash flow or operating cash flow. Just explain that to our viewers.
Right. So essentially, once we close the transaction, which we expect to be in about 9 months, and we're going to have some accelerated revenue growth based on the Ziply Fibre performance and EBITDA growth. It'll be immediately accretive to operating cash flows, and over time, as we get there, the accelerated build done in those states, as I mentioned, going from 1.3 million fiber locations passed to 3 million fiber locations passed, we're going to have some significant free cash flow accretion as well. So that's going to sustain, Bell Canada, BCE's performance over the long term and accelerate our growth combined with our growth agenda here in Canada.
Has this decision to step into the United States for the first time been affected at all by what I think the company sees as a difficult regulatory environment here in Canada?
Look, so we're always looking at where we're going to generate growth, and you always want to generate growth in what you know best. And we know fiber the best. We're the best fiber operators in the country. So when you have an opportunity to accelerate your growth profile for immediately on closing and for the long term, and you can do that over a broader footprint, diversify your revenue base and diversify your geographic footprint. It only makes sense.
What is your message to shareholders and investors on the dividend? The stock is down sharply today. That almost certainly is a surprise and negative reaction to the dividend news. And the news on the dividend is that dividend growth will be paused until at least the end of 2025. What is your message to shareholders on the dividend?
I'd say to shareholders, you're seeing a company that's seizing the growth agenda, that's operating on a front foot, basically a pro-competitive approach. And what we've done, if you kind of think about how we're going to finance the transaction, is we've converted what was a highly coveted asset in MLSE, which has appreciated significantly in value, turn that disposition into a high growth revenue and cash generating asset, whereas MLSE today for us, while it's a phenomenal asset, generates no cash for BCE and we don't consolidate its earnings. And so you've seen a responsible allocation of capital, turning a non-growth asset into a core growth asset. And then with the dividend reinvestment program that we announced, that's going to fund the remainder of we're going to use those proceeds, that cash, to fund the remainder of the transaction. And through the dividend reinvestment program, we're also going to improve our dividend payout ratio by 30%. So again, overall, in terms of strategically and allocation of capital, kind of very positive and responsible allocation.
And there are implications to the changes to the DRIP program to BCE shareholders. Just briefly explain those.
Right. So if shareholders can elect, instead of receiving dividends in cash, to receive additional shares at a discount of 2%, and so there's an incentive, a 2% incentive to kind of take shares issued out of Treasury rather than cash, and then those cash savings that we're going to generate will be used to fund the difference between the MLSE proceeds and the purchase price. You're
taking on $2 billion Canadian in additional debt. What does this mean to BCE's debt leverage ratios, and what is the trajectory that you expect over the next couple of years there?
So the leverage ratio will remain as it was actually prior to the announcement of our stake in MLSE. So if you compare pro forma BCE and Ziply Fibre with a $2 billion assumption of debt to August of 2024, the leverage ratio is essentially stable. In fact, it'll be a little bit better pro forma than it was in August prior to the announcement of MLSE, and the leverage ratio will come down over time, of course, as we generate earnings growth and free cash flow growth through our expansion plans in the United States.
When BCE reports quarterly results after the deal closes, what will we see in the quarterly results in terms of Ziply? Will it be broken out as a separate operating unit of BCE or a separate division?
So we will. Our plan is to continue to operate Ziply Fibre independently. There's a phenomenal management team in the U.S. that's built Ziply Fibre into what it is in a very short period of time. High growth asset, performing extremely well. So we plan to continue to operate independently, and there'll be a reporting segment that will show our performance in the U.S.
Is this a first move into the United States? Might the company make further acquisitions in that geography to build on this one?
So we're going to have an aggressive growth agenda in the U.S., starting first with the Ziply Fibre footprint. Like I said, getting those 1.3 million fiber lines that are present today to more than 3 million in a very short period of time. And if other opportunities come up, we'll certainly take a close look at those opportunities together with the Ziply Fibre management team, the Ziply Fibre management team, who are experts in the field. So together we'll make our judgments along the way.